Professor Brown, thank you so much for joining us. Today we'd like to talk about the interim report on the financial system inquiry.
Yeah.
What are your reflections on the FSI interim report as you've read?
I actually was really impressed by it. I think by international standards this is a great report. I have a great deal of respect for the committee led by David Murray and Kevin Davis. I think the idea of having an outstanding public citizen such as David Murray and an outstanding and internationally recognized academic like Kevin Davis involved in this is a testament, I think, to the integrity of the process and integrity of the results. Of course, this is an interim report, and the final report is going to come out fairly soon. But I think I'm reasonably confident that the outcomes will be very favourable.
What are your views about inquiries and the length of time? There's been some discussion about maybe 16 years is too long between inquiries. Do you think there's that policy might be better served to have it more frequently managed in terms of outcomes?
I'm not sure. I think that when you've had a major disruption of the financial system, as we've recently observed, a new accounting was necessary and timely, but there's no particular virtue, I think, in having a fixed timetable or every few years. I mean, the financial system doesn't change that frequently, but when there are major events that take place, I think it's reasonable and prudent that re-evaluation occur.
Australia's financial system is about 40+% of the economy, and certainly in Australia the financial system is sort of seen as being a strong and vibrant and something that we do well or punch above our weight relative to international markets.
Absolutely.
In terms of your understanding of Australia and obviously the United States, what are some of the key strengths and weaknesses that Australia has in its financial system?
Well, I think the report very clearly indicated the strengths and challenges that the system involves. I mean, there will be future financial crises, and the big challenge for Australia is to, as the committee quite rightly reports, the challenge is to reduce the incidence and impact of those reports. That's, I think, the critical. And you correctly identified that the financial sector is such an important part of the Australian economy that the need to make it more resilient is, I think, a pressing need. The committee also reports, the issues of productivity growth, innovation, technology, and the international integration are threats and challenges for the Australian financial system as we go forward. And I think the report was unusually articulate in identifying those issues and opening them up for a public discussion. I thought that was really productive and valuable.
As you know, Australia is a small, open economy. We're a relatively small population, about 23 million.
About the size of New York City.
But we have a large landmass and spread around the country, but very much coastal cities.
Yes.
In terms of, we've got another review going on, competition review, and competition's a major part of the interim report, and I imagine the final report. What are your thoughts around competition in Australia in relation to financial services?
Well, I think that the Australian financial system is one of the most concentrated in the world, and that's a strength, but it's also a weakness. I mean, almost all of the red flags that existed in the American system before the crisis, I think, are evident here in Australia. We have in Australia a highly concentrated banking system. The report correctly identifies it's not necessarily a competition, but it is contestable. But at the same time, it is too big to fail. I mean, if ANZ or Commonwealth failed, that would have a devastating impact on the Australian economy. I don't see that the government would ever allow that to happen. and there are some danger signals there. And one of the danger signals I see, and it's reported in the report, was that during the financial crisis, the government came to the support of the banking system and exceeded the guidelines and mandates in the Wallace report, of 20 years ago. And people like to say, well, we had a good outcome. Well, that doesn't really necessarily justify. And indeed, I think if I can identify one theme in the report that I have a little bit of an issue with, and it's a quotation that actually appears on page 118. See, I read the whole thing, right? On page 118 of the report, and they quote the IMF praising the prudential system, and I quote, a factor contributing to Australia's resilience during the global financial crisis was its strong prudential framework. Australia's prudential rules, often higher than the minimum international standards before the global financial crisis, together with a proactive approach to supervision, helped maintain a healthy and stable financial system during the crisis. And that idea goes through the report, but I think that statement can be challenged. That's one theory. Another theory is that during the period of the global financial crisis, exports to China were dramatically high, and so I think it's going a little bit far, perhaps, to necessarily attribute the success of the system to the prudential system. I would agree that the Australian prudential system is the envy of the world, but whether that was the one factor which led to Australia's successful emergence from the global financial crisis, I think is at least contestable.
So Australia's got 4 big banks, about 80% of the market.
Right.
Obviously, you mentioned the too big to fail and the
Right.
huge concentration. In your view, do you think that that there should be more banks, more big banks, or do you think that the 4 big banks being entrenched in the system provides an extra sense of stability to our financial market?
It could be, but I think there's a big worry there, and I'm not sure that I have the answer to this, and I would hope that one of the outputs of the financial system report will address this issue. The banking system in Australia is a big concern. We have in Australia one of the largest RMBS markets in the world outside the United States, and the RMBS markets failure of those markets in the United States was held to be a major factor behind the global financial crisis in the United States. The loan-to-value ratios are, by international standards, extremely high. The failure of RMBS issuers to have skin in the game is, again, we have all of the factors which the textbooks now indicate were the precursors to the financial crisis exist today in Australia, including too big to fail. Now, that's a worry, and I think we in Australia have to really think a bit about this issue and in a thoughtful way, and I'm hopeful that that's going to be the outcome of the financial services inquiry.
In terms of the GFC, and we saw what happened with banks falling over in America, right, and bailouts and things like that. Australia was relatively unscathed, although
Correct.
The government was quick to provide deposit insurance
Correct.
or guarantees
Right.
for depositors to bank accounts.
Right.
What do you think is the role of the taxpayer or the government in terms of
Well,
providing?
the issue here is that the financial crisis, as the IMF indicated, the Australian prudential system is very good, and the regulatory system is very good. But the fact is that in the global financial crisis, the problem didn't occur in the least regulated sector of the economy, like hedge funds and those people. The crisis occurred in the big money center banks, the most regulated part of the US financial system. Now, if you say, well, all we need to do is increase the efficacy of prudential regulation and we'll eliminate the global financial crisis impacts on Australia, I think that can't be true. The financial crisis occurred in the most regulated part of the US financial system. So, I'm not as sanguine as some are that we just need to increase the degree of regulation and we'll solve these problems. I think we have to think about major structural reform in the banking system. I think that's going to be required.
Turning to superannuation,
Yes.
superannuation, as you know, is the fourth largest of any country globally.
Correct.
It's about $1.8 trillion.
Correct.
In your view, how does the Australian superannuation system compare to the US pension system?
Well, the superannuation system in Australia is the most protected industry in Australia. Even including Ford and Holden. And people say that the Holden was a great car and justified the tariff and non-tariff barriers that supported it. And people say that the superannuation scheme in Australia worked very well, but the fact remains that we have to. The fact that the Holden is a great car didn't necessarily justify the amount of protection that industry was given, granted, and I'm not sure that the amount of protection, the non-tariff barriers, the inability of foreign fund managers to come into Australia is the problem is the lack of competition in this sector, the high fees. The OECD has indicated that superannuation fees are higher in Australia than anywhere else in the world. And this is an environment after the global financial crisis when self-managed funds, KIA plans and 401k plans in the United States, the costs have been falling dramatically, and a lot of fund managers are hurting by that. At the same time, compliance and other costs. The fund management business everywhere else in the world is really hurting. But in Australia, we're dealing with a world that was like 15 years ago as far as international standards go. And I think that there is room for substantial reduction in costs and efficiencies in the Australian superannuation scheme. And I think these are identified fairly. The report is fairly articulate in that, and I think there's a lot to learn from that. And of course, the industry is going to respond, and I'd be very interested in seeing their response.
Stephen, Australia is recognised as having some good performing, very well regarded financial regulators.
Correct.
There's 4 major financial regulators in Australia. Right. The interim report is suggesting that perhaps there may need to have another regulator added to cover superannuation. What are your views about the regulatory architecture in Australia and the superannuation?
Well, I think the one issue that is of serious concern is the do-it-yourself superannuation plans. Professor Langbein, professor at Yale, identified this as a major social problem back in 1992 with the development of these kind of plans in the United States, and said that this was one of the greatest social problems that would confront America looking forward into the future, when you have people who are not necessarily financially literate managing their own financial affairs. In the old days when you'd have a pension system where things were determined by competent authorities and within a context where bad outcomes can be sanctioned, people could rely on the pension system. But now in a world where individuals are given choice, there's a real problem that when individuals follow poor financial advice and invest their savings following chasing returns and other sort of naive investment strategies. In a world where people can no longer rely on the government pension to finance their old age. I mean, this is a problem in the United States as well as in Australia. There is, I think, a significant role for regulation in this context, and one of the roles is to make sure that financial planners are qualified, that the conflicts of interest are minimised. I'm personally a great proponent of fee-based financial advice. I think that that's the ethical and the appropriate way to do this. People need advice, and they need unconflicted advice.
Would you be suggesting that education standards need to be increased to be able to provide improved quality of advice?
Absolutely. And in the United States, there is a very substantial regulatory hurdle in order to provide, to be a registered financial advisor. And I think that the same could be implemented in Australia with very strict examination standards, and before you can charge for investment advice, you have to be qualified by the legitimate authorities. And I think that licensing system should be introduced into Australia as well. That's a very significant role for regulation.
What are your views about the role of academics and as a sort of an additional independent analyst in terms of better understanding the system and advocating for improvements in public policy? What role do you think?
I'm very impressed by the role that academics have in the Australian system as it exists today. I mean, in America, academics are just another pressure group, and considered, their input is considered of equal weight with industry groups and other interested parties. And I'm very impressed by the role that Kevin Davis is, as one of the leading members of this panel, an internationally recognised academic. I'd be surprised to see such a panel include academic input at such a high level in the United States. So I'm reasonably confident that the best scientific knowledge is being brought to bear and the policy making in Australia.
One thing in Australia that I guess academics but also others in industry and regulators is that we have some pretty big gaps in terms of data and understanding how the market's functioning, etc. Obviously your knowledge of Australia and compared to the United States, where do you think some of the major gaps might be in Australia, and how can we fill them?
Right. Actually, I think historically the quality of data from Australia is very high, and this has been the case for more than 100 years. I mean, the economists envy their Australian colleagues for the quality of data that they've had back in the early part of the 20th century. There was studies done at the University of Chicago using data from the state of Victoria and some of the path-breaking econometric research. The work done out of the University of New South Wales and the University of Sydney using data from Circa was one of the first major work that was done on market microstructure and the trading behaviour. The quality of data available from Australia is second to none. And now, how could it be improved? Well, I think under the Australian system, it would be really nice to be able to acquire data on an individual basis, appropriately anonymised, but to understand how individuals make decisions, and this data is available in the Scandinavian countries, and I think that there'd be a great interest and role to play in seeing how individuals behave. Since we are going to the superannuation system that is do-it-yourself, we have to understand how people are making decisions, and are they making the right decisions, and what can be done to appropriately inform people going forward. And I think that's an area where we could see some growth. But as a whole, I think the Australian data provision is the envy of the rest of the world.
And just in closing, Stephen, do you think that we've learnt the lessons from the GFC, or do you think that we're sort of 5 years away from another episode?
If I knew that, I'd be a rich man. I don't know, but my great fear is that there's too much of a sense of complacency in Australia. There's too much a sense that Australia avoided the worst of the financial crisis, and it will do so again. And I think for that reason, this financial services inquiry is extremely timely to actually have a fact-based analysis of how well did we do, what can we do to reduce the incidence and impact of financial crises. I don't think that experience of Australia during the financial crisis is necessarily a indication of how Australia will fare in future financial crises, and we need to be very careful. So I think the timeliness of this report and the quality of this report are very important and quite outstanding, and I think that I'm very hopeful that we will come to a favourable outcome once the final report is published.
Well, Professor Stephen Brown, thank you very much for your time and for joining us.
You're very welcome. Thank you.